AI is moving fast. So fast, it's hard to keep up. In fact, in ServiceNow's latest AI Maturity Index, scores dipped 20% from last year. But that's okay, because AI isn't a sprint, it's a marathon. You may be behind today, but tomorrow you could be a pace setter. Dive into ServiceNow's AI Maturity Index and see how you can innovate as fast as your ambitions. Visit servicenow.com/AI maturity.
Reality radio for a really great future. We're talking real money.
Hey there, welcome to the show that's all about this crazy little thing called dough. Your money, your life, your job, your spending habits, your plan to save and often failure to do so, your investments and your attempts at investing and failing, and all the things, all the problems that are thrown at you day in and day out that involve money. We want to help you out of those problems and make more sense of the whole process. And to do so, you are invited to call us every single Saturday from noon to 2 Pacific time as we broadcast live on Northwest News Radio in the Seattle area. And that number, 855-935-TALK. I'm Don McDonald. My co-host, as always, the lovely and talented Thomas Charles Koch II.
Taking a break from his vacation schedule to be on the show.
Yeah, when's the next vacation start? Next week, right?
I'm not going to say.
Isn't it a week or so away? Isn't it about a week away?
I just say I'm not going to say.
I think it's about a week. Wait, let me look. I think it's about a week away.
You
I do.
know.
And then, do you have one planned for right after that?
I don't remember.
So we have the the August vacation, then the September vacation.
Actually, there's nothing on in September. I got to make a trip to Chicago, but that's during.
You got an October one coming?
Probably.
Oh, yeah. So give us a call. 855-935-TALK is our phone number, 855-935-8255. And we're going to try and help you make sense out of this crazy business that we're in. And it is a crazy business we're in, filled with people who I honestly believe actively try to mess with your heads to get at your money. It's tough to figure out what their incentives are sometimes.
Motivation,
what their motivation is, but it's often money. And there's a guy who used to have a radio show. In fact, he used to cleverly call himself Ric Edelman.
So you could type it in the internet very easily.
Yeah, because it's R-I-C Edelman, yeah. Ric Edelman. Yeah. He sold his firm for like $1 billion.
He sold it about 3 or 4 times.
Yeah, he sold it to Financial Engines.
That's right, yep.
And now he's running around playing the part of crypto god. And
but beyond that,
blockchain,
bozo.
Yeah. He actually said that he believes in 5 years. Yeah. I swear they say this stuff just to get press.
Just to give himself a little space too. 5 years.
5 years. 5 years. That ETFs will be gone.
I know.
We just got used to them.
I know. He's talking about tokenization, which in my day meant something completely different. But
we can't even politically say, even though we're not going to say anything negative about it. But it was
but he's and when I first read this, I thought, what's he talking about? He's talking about the fact that exchange trade. He says it will be gone in 5 years.
Tokenization is a technology term.
I thought it had something to do with smoke.
No wonder you don't know what the heck it means.
Is that? But he's saying in 5 years, ETFs, all the trading will be done on the blockchain.
Well,
and you can trade 24 hours a day, and you can just a madhouse.
They'll cease to exist as
that's what he said. Yeah.
As these separate devices that you trade through the New York Stock Exchange or the Americans or over the counter or all these places.
And some are already doing it, right?
Yeah, not very many. It's
but I read a couple major firms are still
playing with it.
They're still trying it. Yeah.
It's in its this whole process. Tokenization means
one tokenization over the line.
It means not that. Anyway, it means putting it on the blockchain.
Yeah.
For those of you who don't know what the blockchain is, well, welcome to the club.
Club crud. Yeah.
It's all about putting everything on millions of computers around the world to take out the middlemen. Well, I can tell you the middlemen aren't going to go down without a fight. You think Schwab is going to be
involved
a big,
here?
Yeah. There's a lot of money involved. And it took a long time to get ETFs where they are, and for them to be, for us as consumers to accept the tokenization, the possibilities. Remember, the blockchain, for all its perceived benefits, has also been shown to be full of holes
and fraud. And I mean, but the thing that worries me the most when he says it will open an array of investment opportunities that today don't even exist.
Yeah,
that's when I
me.
get nervous. Yeah, because guess what that means? We're coming for your money.
Right. and the other thing is that right now the tokenization of securities is in tiny little numbers. It's barely happening, and the ETF market is worth trillions of dollars. We have very established trading venues and the custodians of the ETFs who are trusted custodians like Vanguard. Can you see the regulatory problems potentially, particularly in an environment when we don't have a lot of government regulation, we don't have the bodies to handle it? What might happen if we allow this to go to an unregulated custodial system? This is so scary, and I was trying to figure out why Ric Edelman is pushing this kind of stuff. Why he's pushing tokenization and pushing crypto. It's because his next act is all about. He's got a company that benefits from training and lobbying for digital assets. So,
well, he also says that U.S. financial advisors, half of them own Bitcoin, but only 20% recommend it. I think if you're working with somebody, you should ask them if are you eating what you're selling.
I don't know. I don't believe him when he says that. 855-935-TALK is our number.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
While tokenization and the blockchain, again, we've said this before, have potential for doing new things down the road. It's high-tech. It has potential, but right now it's still beyond most people's ability to manage it. It has all kinds of potential problems. We've got the regulatory problems. We've got the control and custody problems. I mean,
yeah, that's a big one.
Think about the people who have lost their crypto keys.
Yeah, and then what do you do?
You can't do any. There's no Schwab to rescue your account when you forget your password. Yeah. So there's just so many problems that I cannot, in my wildest dreams, imagine this is something that's going to happen anytime soon. So if you hear somebody say ETFs are going away, ignore them. ETFs are going to be around for a long time to come, I believe. 855-935-TALK is our phone number. That's 855-935-8255. And Tarvik, you're up next. Welcome to Talking Real Money.
Hi, this is Karthik.
Yes, sir.
I want to discuss two things which I got to know through one of the financial advisor that I met last week. One is this tax code 7702, which says that. Which he told me that you can invest in this particular area, and then you can grow your money without tax. It's kind of he mentioned that it's kind of a life insurance where you put your money and the money will grow tax.
All right. Can
other thing is around.
Well, why don't we answer the first one first?
Let me just take care of this one. One, you're not dealing with a financial advisor. You're dealing with an insurance salesperson. You're also dealing with someone who, in my opinion, is just possibly slightly better than a pure con artist. This whole thing, this is the bank on yourself.
Yeah, been around for a long time.
Concept of selling somebody cash value life insurance to create an income stream that's tax-free because you borrow the money from yourself.
That's right.
There are so many holes in this process. You could drive like a train through them. You could borrow against them, but you pay interest back to yourself. If you don't make the payments on the life insurance policy, then the loans immediately become due and taxable. These make huge commissions for the people selling them. This is a person from whom you should run at the greatest possible speed and never speak with them again.
Next question.
Next question is, thank you so much for the advice. I was also very skeptical of whether to go there or not. But your advice helped a lot to make my decision.
Please don't. Leave them alone.
Okay. And another thing is around, there's something called Tax Act 2020, where he mentioned that you can show losses in your current year, so that IRS can give you the whole whatever you owe the tax, it can return back. So basically, what he's saying is, invest some $100,000. We will buy bonds which is already at loss, and then we'll buy those bonds at 75% of the current value, so that you will get some profit out of that.
This person sounds like such trouble. It sounds like they're trying to truly. It sounds like it now starts to sound like a con artist, like somebody who's really playing games with and playing fast and loose with facts. There are no effective tax shelters for anybody but the ultra rich, and even then they are so complicated, and they often end up getting those ultra rich people, as smart as they are, with all the attorneys they have, in deep trouble with the IRS. There are no magic tricks that some insurance idiot knows about and no one else does. Do you think if there was a wonderful way for me to get all kinds of gains and huge tax losses, I wouldn't be doing that instead of building a 60-40 or 70-30 portfolio? I mean, Tom and I are actually pretty smart. We've been in this business for a while. These things are just, they're as close to scams as scams can get.
I'd call them gimmicks. Tarvik, I would go back at to where you started from and say, what am I trying to accomplish here? Am I trying to build something for my future? Are taxes really at the fore? Because it sounds like it's all about the taxes rather than just building a portfolio that's going to pay you later. So I would go back to way back before I'm getting into all these gimmicky products. People often start at that point and forgetting that, no, what I'm trying to achieve is this goal. And part two of that is they end up, because so many people, I just don't want to pay any tax, never. Yeah, you're going to end up paying taxes. If you make money as income, you're going to pay tax. If you get dividends, you're going to pay tax. If you have capital gains, you're going to pay tax. So I would just go way start at the beginning rather than starting at the end, I guess.
And any advisor who starts with anything other than let me learn more about you and what you need your money to do for you, and starts with any kind of a pitch, a concept, a gimmick, any kind of convoluted garbage, you are not dealing with a true fiduciary financial advisor. You're dealing with a highly commissioned salesperson.
Got it. Thank you so much.
You're very welcome.
Yeah, and we hate to be the bearers of bad news, because I'm all in favor of finding that thing that I can make a lot of money and pay no tax on it. Just haven't found it yet. So,
this brings me back to the same old problem that I swear I've been talking about on the radio now for almost 40 years. The problem with this industry is that and I wish this wasn't the case. I truly wish this wasn't the case. I wish I could say almost everyone you're going to talk to in the financial services industry is going to be honest with you. But I have to tell you, they aren't. The vast majority. This is why you have to go into any meeting, even with our people, with a high degree of skepticism.
I agree. Yeah, yesterday we had a company thing. And we were talking about somebody we know in the industry that we used to work with, et cetera, and he went to a firm where they use things he doesn't agree with. And so he's trying to figure out how does he negotiate that, because he doesn't believe in some products that they use.
You mean
That's
indexed
tricky.
Annuities, maybe?
No, not index annuities, but actively managed funds, et cetera, et cetera.
Yeah.
Yeah, it's like, I don't know. So I think you're right, Don. I think you need to have core beliefs. You need to be ready to hold to them. And you need to be ready to question everything people say.
But the problem is that most investors don't have core beliefs because they don't know what they should be. But they don't know enough to know what they should know.
But that's diversification. That's low-cost tax efficiency.
Right.
If you have those things, then you at least have some defense against, hey, this is going to be great. You're not going to pay any tax. How would you do that? Then you'd be asking. I think that's legit.
Yeah, I just think don't trust until you verify. Don't trust until you verify.
Yeah. Okay.
I'm sorry, Mr. President or Mr.
It's your money.
Or whoever said that first time.
I think it was Ronald Reagan, actually.
Yeah, well, I think so. There was a question as to whether
verify.
Yeah, I think there was a question to whether he was the first one to use it. I think
first. That's a long time. So yeah, I think it is a Russian proverb of some kind.
Yeah, I think that was it.
I believe that's correct.
Yeah, I think that was it. 855-935-TALK. Look at us with a line open for you right now. 855-935-8255. And if you are concerned about somebody you're working with, why don't you call?
Tom and Don are talking real money.
The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. From improving emergency response times to protecting against cyber attacks, local, state, and federal governments are innovating with Google AI. This is a new era of American innovation. Find out more at g.co/American innovation.
For your real life and real future, Tom and Don are talking real money.
Yeah, it was a Russian proverb. That was it. That's right. You're right. You're absolutely right, Tom.
Thank
it's
you.
a Russian proverb.
Appreciate that. Yeah.
855-935-TALK is our phone number. 855-935-8255. But I've been remiss. I haven't mentioned that there are, of course, other ways to ask us questions. You can go to talkingrealmoney.com, and there's a contact us link in the upper right-hand corner. You can click on that, and you can send questions into us, and Tom will read them right there if you type them, or I'll answer them on the Friday podcast if you speak them. Or you can just call us regularly on the show, like you're doing right now, 855-935-TALK, and let's go to Renton, Washington now. And David, welcome to the show. Hey, David.
Hey, guys. How you doing?
Good.
I'm calling. I got a question about crypto. And I know you guys really don't condone crypto, but anytime you talk to somebody about crypto, if you don't believe the way they believe, they say you just don't understand. So I don't understand. If everybody like MicroStrategy and so forth keep buying all the Bitcoin that's out there, keep sucking it all up, how can something have utility if there's nothing left on the market to be able to be used? So I don't understand how they're making money, or how you can make money in crypto except hoping someone pays more for it than you did.
Let's just set the record straight, too. Because it's no longer MicroStrategy, it's just strategy now, just so people know that the company changed their name because they're no longer micro because Bitcoin's gone up. But go ahead.
Right. But, I mean, you need cash to buy Bitcoin, so you buy Bitcoin because you want to make more cash. Mm-hmm. So the reality of it is the number one answer is cash. But if they keep buying all the Bitcoin that's out there and there's nothing floating around in the environment, how do these guys expect to make money on crypto? That's where I'm at a loss. I was hoping one of you guys could explain it.
Let me say it in two words: greater fool.
Ponzi scheme?
It's the concept.
No, it's not. It's not a Ponzi.
Did you ever know of anyone years ago who was buying Beanie Babies in hopes that they would become more valuable?
Oh, yeah.
Yeah. What did they do? They did become more valuable. The Princess Di Bear at one point was going for $10,000. Now, if that was crypto, people would say that is evidence. That is huge evidence that it's a great investment.
I got a tulip bulb for you, too.
Right.
But if you hoard all the liquidity and it's not available to be utilized in a market-type situation, then once it's all sucked up, there's nothing left for anybody to purchase.
There will always be somebody. There will always be somebody. The guy who, for example, the guy who got in 5 years ago at $35,000 a Bitcoin, or 30 or 15 or whatever it was back then, is probably going $140,000 or whatever.
Give me
I don't know.
money.
See, I don't even follow it. I think I'm just going to go ahead and sell to that because I know eventually this thing is going to run its course. So I think I'll go ahead. You will always find liquidity. It's like you can't buy up all the stocks in the world because there's always going to be somebody selling a stock if the price gets high enough.
But there is a finite amount of Bitcoin out there.
That is correct.
And it's not. And so the reality of it is with them hoarding as much as they have, the more they hoard, the less utility it has, correct?
Actually, today, I still believe it has just under or just over zero utility. Still.
Yeah, I mean, I guess I get back to this. Your question really is about the functionality of Bitcoin, et cetera. Are you looking at this as an investment, or is this?
No, I think he's looking at it. I get where he's coming from. Where you're coming from is if all the Bitcoin is owned by Strategy and all these other people, how is anyone able to spend it?
Right.
Right.
How do you take it to El Salvador and buy a pizza?
Right. Because there's still somebody who is going to say, "Oh well, it's all I have. It's all I have. I put all my money in Bitcoin, and I need a new car, so I'm going to convert it into cash at whatever the market price is and buy the car."
I mean, I guess there's so many people out there that are a heck of a lot smarter than me that are hoarding the heck out of Bitcoin.
Yeah.
And I don't know. I just always found when you remove 100% of something from a marketplace, there's no one left.
Yeah, and the other factor really is why is it worth this much? There's no good reason. Thanks for the call.
Tom and Don are talking real money.
Hey, it's Ryan Reynolds here from Mint Mobile. Now, I was looking for fun ways to tell you that Mint's offer of unlimited premium wireless for $15 a month is back. So I thought it would be fun if we made $15 bills. But it turns out that's very illegal. So there goes my big idea for the commercial. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
Reality radio for a really great future. We're talking real money.
Just to put this little Bitcoin bit to bed, Bitcoin has really two purposes right now. Right now, as it stands right now. One is to send money to someone easily and anonymously without needing a bank. That it's used a lot for illegal transactions. If you wanted to buy a lot of drugs from Colombia, it's a whole lot easier to send them $1 million in Bitcoin than it is to send them $1 million in $100 bills. So
now that does not say the federal government wouldn't find out about that either.
No. I'm just saying that generally it's easy.
Yeah. Yep. Okay.
The other reason it exists is for right now, speculation.
I was going to say that's
for speculative
number
purposes.
One for me. Yeah.
And Bitcoin will keep going up for as long as people believe it will keep going up.
Truly it is only worth as much as the next person believes it's worth.
That's
exactly
it.
There's nothing else to it.
There's no other way to value it. It's based on what the next person believes it's worth. Yeah. Now, that could change if, for some incredible, unbelievable reason, it suddenly became a globally accepted currency like the dollar or the euro or the pound or the yen or the renminbi.
Baht.
The Australian dollar, the Canadian dollar, if it became one of those, then that would change the situation. Yep. But that's a huge leap of faith on the part of crypto enthusiasts. It's their leap, but it is a huge leap of faith.
That's not the narrative today, I don't believe, though, when it comes to crypto.
What's the narrative?
Crypto. I think the narrative is that it will become not traded between countries like a currency, but it'll be more used by people.
But that would make it a currency then.
I guess so. I guess you're right. Yeah, one does.
It has to be a regularly accepted currency where I could, without any hassle, headache, walk into my neighborhood Publix grocery store and pay for my groceries.
Peel off a couple of Bitcoins. Snap it in there.
So that's it for that for today. 855-935-TALK is our phone number, and now we head to Seattle. Ellen, you're up next. Welcome to the program.
Hi, how are you?
Good, Ellen. Thanks for calling.
Yeah, thanks for taking my call. I have just a couple quick questions.
Okay. Oh, turn your radio down.
First of all, turn my radio down. Okay.
Yeah, that helps.
Sorry about that.
Turn Dawn down and turn your radio down in that order. Yeah.
Hey. Right. So I'm 57. I plan to work for probably about 5 more years. And I am having some trust issues with my financial advisor. I feel like they don't really answer my questions. And I'm also curious if the amount of money they're charging me sounds pretty reasonable, or if it's
okay, well, let's stop right there. How are they charging you?
Okay. They're charging me a percentage.
Okay, and what percentage are they charging you?
I knew you were going to ask me that.
Well, I mean, if you're going to tell me it's fair, I'm going to say how much 1%. Is it? And how big is your portfolio?
Just under 1%.
Just under 1. Okay.
It's a little over $1 million.
Okay, that's about right. So what is it about them? Wait, she said she was worried about them.
I know, but I want to finish the costs.
All right.
How much are the investments that they put you in charging as well? Don's shaking his head.
She's not going to know that.
Okay, but
but she's not going to know that. She's not going to know.
Give me one investment.
No, she's not even going to know. Hold on. Okay. All right, hold on.
That's it.
Ellen, hold on. We have to take a break, and I really want to know why you feel the trust might be broken. We'll get to the money later. 855-935-TALK. That's for the rest of you. We'll be right back.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
All right, fees be damned.
Okay.
Fees be damned.
Letting it go.
We want to get to the meat of the matter.
All right.
Ellen is calling, and she might have a concern about her advisor. And Ellen, what might that concern be?
Just because I'm single, and so I'm kind of on my own figuring this out, and I just feel like they oftentimes don't want to take the time to answer my questions, or they'll read an email and answer a question I didn't even ask, and it just leaves me feeling kind of like, well, I'm paying them all this money, about $10,000 a year. I want to feel like they're answering my questions and making me feel comfortable.
Give me an example of a question that you don't feel they answered adequately.
Yeah, so I was kind of talking to my tax person since I had a really low income year. I'm going to have a low income year this year. And my tax person was saying, talk to your financial advisor and ask them if they think you should move some of your retirement into a Roth and pay the tax on it this year while you're in a lower tax rate. And they just replied with, yeah, you can open a Roth this year if you want. You just they like thought I was asking them something about the tax year of 2024.
Yeah,
and I felt
so
like
they really didn't pay attention to your question, in essence.
Not really. Yeah.
Now, there's only one way, short of getting the name of the company and looking them up online, for us to give you an opinion of them. And this is going to go back to Tom's question before, but not the fee part.
Oh.
Can you tell us any of the investments that this advisor uses, the names of any of the investment vehicles you might be in?
Well, they're all Schwab.
Okay.
Schwab products?
Schwab products?
Held at Schwab?
They're held at Schwab, or are they Schwab ETFs?
Okay. They're Schwab ETFs, yes.
Schwab ETFs.
All right. Okay.
And can you give me any of the names of any of them? Do you remember any of their names?
Yeah, I can see them right now.
Oh, she's got them.
SCHX, Schwab, SCHB, Schwab, IVOO, Vanguard.
Oh, you've got others.
Tons of them.
Okay, how many tons?
Oh, yeah, I've got probably, oh my gosh, let me see, 1, 2, 3, 20-ish.
20 ETFs?
For one account, or is that several accounts?
So, yeah. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. I apologize.
Yeah, that's okay.
And that's in one account.
Yeah.
That's a lot.
That's probably okay. That's a lot.
Probably okay. Yeah. What I'm hearing is that you have an advisor who charges a reasonable fee. What I'm hearing is that your portfolio, while it may be a little out there with a few too many funds, but that's neither here nor there because they're all inexpensive funds. So my thinking may be, and Tom, chime in, is that there may be a communication issue with this particular advisor.
I think that's fair. I guess if I was in that situation, I would go back to them and say, here's the reasons I'm concerned. Please help me understand why my communication with you isn't better. Or conversely,
manager. Because
I think, again, because what Don's saying, and I think he's right, is the cost seemed reasonable using Schwab products. That's all reasonable. Maybe go back to the higher up in that company and say, look, I'm just not doing well with this particular advisor. Can I work with somebody else?
Yes,
they're glad to do that.
That's what I would consider. It sounds to me like it's just not. There's not a communication commonality, connection between the two of you. And I would go to the manager of that firm and say, is it possible for me to work with another advisor and see how that is? Because it sounds like the firm is doing good business.
Yeah, I've been with them for a long time, and I had a guy there that we just got along great, and I thought we had great communication. He left.
Yeah.
Then I got stuck with this new guy who I just feel like he's either so busy he doesn't really read the questions, or sometimes he'll say things to me like, I have one fund that I have left from an employer. It's like $50,000. It's not that much. And I've asked them about moving it over there, and I've asked them other questions at the same time, and the only thing they address is moving the money over.
Yeah,
and it just makes me feel
money.
very...
Yeah, he's looking for the AUM. So we have, and we know this, is we have a young advisor who's building a book.
Yeah, this happens.
And I would ask, because you have a big account.
Yes, you do. Yeah, I'd go back, and I'd say, and you're young, so the money could be there for a long time. So it's not like, no offense, you're 87, you're going to take the money out soon. So I would go back to them and say, look, I had a guy I loved, new guy, not communicating so well. Can you give me somebody else?
Are you saying that advisory firms boot 87-year-olds?
No, I'm saying
they don't care about you anymore, 87-year-olds.
They don't care as much. They don't care as much because they're only going to manage money. I didn't say they should. I just said that happens. That's all.
Okay.
Not to me, because I'm old too, but, because I like old people.
So just tell them to give you a new advisor.
Yeah.
Okay. Can I ask you one more quick question?
Sure. Of course.
When people do start taking their retirement, do they continue to use these advisors? So you're drawing money, but then you're paying these fees. I kind of just don't understand how that all comes together.
Well,
that's like your money would start getting drained really quickly.
Well, that's the more complicated part of investing and financial planning. So if you're asking, does it make sense to have an advisor after you retire?
Yeah.
Most of the time, more sense.
Yeah, because here's the deal. Having a good advisor, You may look at your numbers and go, well, wait, that's just drawing down my capital. But the fact of the matter is you have a portfolio that is being managed by someone who's keeping you, and I'm not saying you personally, but you clients in general, from doing the things that we know clients in general do. And that is selling when they shouldn't, moving where they shouldn't, doing things when they shouldn't. And that's why we had someone on from Vanguard recently who said, we did a study that showed that having an advisor increased your returns over doing it yourself by on average of about 3% a year.
Which is significant. Yeah. Okay. No, so, that would be important. But I don't like the fact that you're not connecting with the person that you're working with. That should be fixed because your financial advisor, that should be a pretty close relationship.
It should almost be as close as a doctor.
Thank you.
Yeah. It should be somebody you feel as comfortable talking to as you do your doctor.
Yeah, I think that's fair. Yeah.
Okay. That's good to know. Thank you so much. I really appreciate it.
You're very welcome, Ellen. Thanks for being a part of the show. Take care. Thank you. Let's go to Pennsylvania now. Bill, welcome to Talking Real Money.
Hey, Tom. And Don. Good to hear and talk to you. I listened to you various times over the years, Don, going back to Disney days.
Disney days.
I made good decisions.
Disney days. Isn't that
Live
the name
from
of the
the
movie?
Walt Disney
Don
World
McDonald,
Resort.
Disney Days?
Yeah.
Because he was into days at Disney, or how does that work? I don't remember. But.
Well, I'll leave that up to you.
Okay.
But my question regards the pro-rata rule. I don't understand it or the why behind it. So let me just give you the context. I've got a lot of my assets, or a significant amount, in 401ks and traditional IRAs, so pre-tax. So I'm looking at just starting to chip away at moving some of that from traditional to Roth, with the right tax bracket and all that. With my 401k, it's all pre-tax, and my traditional IRA, it's mostly pre-tax. But somewhere along the line, probably in the 80s or 90s, I commingled enough to say, oh yeah, it was post-tax money, and I put it in there. So I don't realize that what the issue would be decades down, and I probably didn't keep all the 8606, whatever the number is. So I just don't understand the pro-rata rule, and if I just don't claim it at all, just say all the money that's in there is just walk away from that part of it. Do I even have to worry about the pro-rata rule? The government gets more, and then the second part of that is, what does the government get from the pro-rata? All right.
Well, more tax revenue is what they end up getting, but we'll answer the first part after we take a quick break. Hang on with us just a minute, Bill.
Tom and Don are talking real money.
Does it ever feel like you're a marketing professional just speaking into the void? Well, with LinkedIn ads, you can know you're reaching the right decision makers. You can even target buyers by job title, industry, company, seniority, skills. Wait, did I say job title yet? Get started today and see how you can avoid the void and reach the right buyers with LinkedIn ads. We'll even give you a $100 credit on your next campaign. Get started at linkedin.com/results. Terms and conditions apply.
For your real life and real future, Tom and Don are talking real money.
All right, let's talk about the pro-rata rule really fast. It's really simple. If you convert a traditional IRA to a Roth IRA, and your traditional has both pre-tax and after-tax money, in which case it does here with Bill, then you cannot just convert the after-tax part and skip the tax bill. They're
going to make you take the
there's a reason. The reason is they want the money. That's really the reason.
But it has nothing to do with your 401k, by the way. It would only be with the IRA.
No. So in the IRA, like I said, I probably put in 2,000 here or 2,000 there. I know it sounds terrible to say. I don't care. If I just don't care, can I just not do the pro rata rule? Because then it would seem to me that would be in the government's favor, not mine.
So just pay tax on the whole thing, you're saying?
Yeah, then that would be as long as you pay tax on it. As long as it comes out in their favor, they're not going to complain.
No,
because let's assume for a wild, crazy moment they decide to audit you over this, and you go, why would you be auditing me over this? I paid taxes on everything. Just pay taxes on it all.
Right, because I figure it's, sometime I put in 2,000 or 4,000. I don't know when it was. It was a long time ago.
Yeah.
And so, but trying to figure it out, get the paperwork, just to me, it's not worth it in the long run. And it's
a lot of work.
So
if it's only a couple of grand here and there, I'm totally with you. If you don't have the 8606s, then what you do is you just transfer it over. But again, make sure there's some tax planning overall done for those conversions so you don't kick yourself into a higher bracket. That's where it could become real money if you kick yourself into a higher bracket.
And you want to 86 the whole thing under that circumstance. So
8606 the whole thing? No, just 86
the whole thing.
86.
Oh, gone, yeah.
Not 06.
Yeah.
Make sense?
I appreciate, I appreciated that, Tom. Just barely, but I appreciate it.
Just barely.
Hey, look, that's all I need.
Man, people are pandering to you today, aren't they?
1/8, 1/10, whatever.
There was I think it was Ellen or somebody who just kind of went like this, went, ha.
Right. Next. Yeah, good.
All right, Bill, thanks for calling.
Thanks, Bill.
Well,
Appreciate it.
All
No,
right.
thank you.
We've come to the end of another hour.
I know.
Thank
I know.
goodness.
The sun is now out.
Couldn't come too soon.
It's the end. This is the end.
Yes, because in the next few minutes, Tom will be going on vacation again.
Yes, somewhere out there.
Hours. Yeah. And if you want to ask us questions other times, sometimes you go, I can't call them at 855-935-TALK because they're not there.
And thanks for all the calls today, by the way. It's been great.
Thank you.
Wow,
go
lovely.
to talkingrealmoney.com. Click on that contact button and type in your question, or even better, use your microphone and speak it in.
Because then you can be on Don's Friday show. And if you want some individual help, you can do the same thing. Go to talkingrealmoney.com. Ask an advisor.
No. Meet an advisor.
Meet an advisor. Meet an advisor. Ask an advisor. I don't know. It's all the same.
Button
so
at
get some help.
talkingrealmoney.com.
Is that fair enough? No.
And then
we
appreciate it when you tell people about what we do.
Oh, I was trying to figure out
Have them
what
join the show on Saturdays if they're in the Seattle area, or you can listen online.
Yeah.
It streams all over the country. Streams all over the place. Also, though, we do a podcast. We turn this show into a podcast. We do other podcasts. They're pretty much 5 days a week on your favorite podcast service. And if you want to listen to them somewhere else, just go to talkingrealmoney.com.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.